To help us set up the trading day, let's welcome in now Kevin Hincks, who is the co-host of Fast Market live from the CBOE. And I suppose with a fairly economic data, quiet earnings, quiet type sort of week, we are waiting for more tariff headlines, a bit more sort of confirmation on where we go from here. The letters are out. You've got mail. But it's been interesting as far as the Asian equities action overnight as to some of those countries that are going to cop some of these duties, how they're feeling about it, because we actually saw the Nikkei and the Kospi up, which is interesting. But how are you looking at things, Kevin?
I look at this market, good morning, Sam, as a headline-driven market. And yesterday the headlines were, Elon Musk and tariffs. And that weighed on stocks. It weighed on Tesla, which weighed on the S&P and the NASDAQ. And then tariffs midday started to chip away at the confidence of the markets. And without any earnings, without any economic data, that's what we were left with for early July, coming off a holiday weekend. And so, yes, we're a bit fragile up here at or near all-time highs in the market, and it doesn't take much to shake the equity market. So I believe that we're in a dry powder environment as we sit in that chasm between the end of first quarter earnings season and the beginning next Tuesday of second quarter earnings season. And so we wait, and we are a headline driven market. So we wait for new news, new headlines. You mentioned 14 countries got letters ranging from 25% to 40%. Throw in the BRICS group that also got a little warning from President Trump coming off their little summit in Brazil. And you've got just a slightly elevated amount of uncertainty. Now, today, to start the day after consuming and digesting everything yesterday, markets are very quiet this morning. The VIX still sits around 17, but you've got very small percentage moves across the board here. And so what do? In midsummer, early July, in between earnings seasons, we sit with dry powder and we wait for headlines to move the market, Sam.
Yeah, I was speaking to someone yesterday who does say that they do expect a bit of a mild correction, particularly ahead of the earnings season. But it's interesting, isn't it, Kevin, because it seems like the market narrative has shifted from somewhat durability and resilience to complacency. And I've just seen a note out from Kenny Pulkari this morning talking about the fact that while the market loves to hold on to a reason as to why we saw the sell-off yesterday, and as you say, very headline heavy over the weekend, he puts it down to just pure exhaustion. What do you think?
Yeah, just look at the numbers. Look at the percentage numbers that the market has run. Like some of the news out this morning are the banks are getting downgraded. Well, the banks aren't getting downgraded because they see any systemic weakness. The banks are getting downgraded because how far they've run, right? In a strong economy confirmed by really strong movement in the banks, they've run a long way, especially going into earnings season. Remember, what starts earnings season? Banks and airlines, right? We're going to get Delta on Thursday, United Airlines next Wednesday. Next Tuesday, we get JP Morgan, Wells Fargo, and Citi, and then Goldman, Bank of America, Morgan Stanley the next day. So a lot of those names, if you look at their charts, they've had great runs up to these levels, confirming a strong U.S. market. So if you think about it like we talk about a lot on Fast Market, high bar, low bar going into earnings season, the banks are going to have a very high bar. And that's why you're starting to see some hesitation in some analysts lowering some of their earnings to holds. It's interesting. You're not seeing, in some cases, you're not seeing hard downgrades, but you're hearing analysts go to neutral on names and market perform, which means, yeah, they may go up if the market goes up, but these stocks have all run a long way. People are getting a little shaky here ahead of second quarter earnings season, Sam.
Yeah, and as you say, a data light, but we do have something on the US macro picture, and that is a small business optimism, no doubt going to give us a bit of a sense of how some of these companies are feeling, particularly in light of everything we're talking about with regards to the tariff headlines. What are you seeing there?
Yeah, if you're a data geek, you like the NFIB Small Business Optimism Index. It stayed pretty stable Back above, finally, its 51-year average of 98. It came in 98.6. Here's the highlights. Optimism remained steady, but uncertainty fell. That's good news. Respondents reporting excess inventories. I think that's an interesting part of this. They're actually citing excess inventories contributed to the decline in some of the index in July. Taxes remain the top issue on Main Street, and others concerned about labor quality and labor costs. So small businesses dealing with a lot of the things, but I thought the inventory point was very interesting because all the worries about inflation and running out on inventories and all the tariffs, and it's actually higher inventories is what has some small customers or small companies worried. So kind of interesting data here if you love to dive into it. Small business, such a big part of the U.S. economy. So the NFIB number that we got out this morning, an interesting read.
Oh, it is, absolutely. A bit mixed, as you say, and certainly a very interesting and very significant key barometer there, as you say, to give us a sense of how things are faring over at the small businesses. I'm just wondering, with those excess inventories, if you could just sort of elaborate more. I mean, how much of this has got to do with some of that front loading that we've seen?
Yeah, people may have planned for tariffs and inventory problems that either aren't showing up or they're well stocked ahead of summer and worried about their inventory levels. So yeah, I agree with you. It's interesting. How did we get to the high inventories? Is it because you front loaded ahead of tariffs and stocked up? You know, inventory choices are a big problem for small and medium-sized businesses. Just look at what in the past, right, or during COVID, what inventory mistakes did to companies like Target, who misread discretionary inventories, and really their stock got punished and their margins got punished because of that. So inventory levels for small businesses very crucial, and so for that to pop up in this report, it's a bit of a concern and something we should all pay attention to, and how that carries into the inflation talk.
Oh, absolutely. But I suppose that bodes well for extending Prime Day from 2 to 4, because I suppose that tells us a lot about the fact that they have plenty in stock for that event. Kevin Hincks, thank you so much. Really appreciate it.